Okay, so just to introduce myself for those who have not seen me before, my name is Leanne Kilbride. I'm one of the tutors which are based up in one of the northern centres up in Leeds. So if you're from obviously my area, you'll know my accent. If not, obviously I do have a Yorkshire accent, so just bear with us. If there is anything that I'm going through this evening, please feel free to drop any questions into the chat box. Okay, so you can either direct the question where everybody sees it, or you can do it a direct question to me, just where you start typing your message, just a little drop down box just at the top where you can obviously select me, so that message will come direct, nobody else will see those questions. Okay, so welcome to Decisions and Controls Revision Evenings. Okay, so we will see in this session today that we're going to be covering 2 of the tasks, and the task that we're going to be covering today is task 5 and 6. Okay, so for the previous 2 weeks, I've actually covered task 1, 2, 3, and 4, and there are recordings available for those 4 tasks if you have not been in my previous sessions. Okay, so what will happen is within the next 24 hours, the revision team will send out an email with a copy of the recording of this evening's session, along with my annotated notes as well, just to give you that little bit of help, just in case there was anything that you missed this evening. And you need to go back and revise for it. Okay, so the idea of these revision courses is it's not to teach you the module, because you should have already gained that understanding and knowledge of the module through your training provider. So the idea of these is to show you how to tackle each task in the exam. So every tutor has their own ways of, answering questions. So this is how I would deal with these 2 questions anyway, task 5 and task 6. So we're kind of teaching you to pass to attempt the task successfully. Okay, again, with all the knowledge that you've gained from your training provider, then, putting that together with this evening should then help you with that exam. Okay, so as I said, we'll be covering task 5 and 6. So hopefully you've all got your material that's been sent through from the revision session. Okay, so there are still a lot of people still coming through from the waiting room. So fantastic numbers. We're on 42 at the moment. So I want to see if we can see if we get that to 50, which would be amazing. I know some of our revision classes in the past have had over hundreds of learners joining, which is really, really good to see. Okay, so if you turn to page 19 of your revision question booklet, this will draw your attention to the start of task 5. And at the beginning of every task, there is a little bit of briefing just to help you with the revision side of your exam. It doesn't say this is what you will see. You will definitely see these areas, but what it is saying is these are the things which may likely come up in your exam for this particular task. Okay, so what task 5 is? Task 5 is the dreaded written section. Okay, so there are 2 questions in this exam, which is a bit of a wordy question. So that's task 5 and task 7. So I'll be going through task 7 next week. Okay, so if writing's not your strong point, I do advise you to focus a little bit more on these questions, because they do give quite a lot of marks out. They do send a lot of marks for your pass mark anyway. So as you can see, there is 18 marks in total in this one. Okay, I would always draw your attention to the time as well that we're stating should be allocated to this task. So when you are in revision, please try and complete this task within the number minutes that we're telling you that you should be completing with it. So with task 5, as we already established, it is a written one. And what you need to do is you need to not only think about variance analysis, but you also need to consider any ethical conflicts or goal congruence as well. So what that means is with this area here is the consistency, okay, or agreement. So for those who didn't know what that meant, it's consistency okay, or agreement of individual goals, okay, with company goals. Okay, so basically what we're trying to say, is there any conflict? Okay. Is there anything that your department wants to do that doesn't meet the needs of the goals for the organisation? So these are the things that are coming through. So a question's just come through there on the chat. How is it a 24 solid point, but the task is only 18 marks? For you to achieve this and pass this at the 70% mark of things, we're looking for around about 18 marks for a full question. Even though it says there are 24 points available, that means for you to achieve the 18, it means that you've met what you've needed to obviously pass this exam, to meet it. If you want to go and exceed this section, there is 24 marks available. Okay, so just think 24 marks there is available in total, and that means if you put 24 sections, then you will exceed in this question. Okay, so as it says there then, so we need to demonstrate your understanding of variance analysis. So last week we did actually cover some variance analysis, so you need to bring that knowledge into it. And again, think of the ethical considerations as well. Okay, so when we're actually thinking about variance analysis, you need to kind of think of, well, why do we do this as an organisation? What's the point of doing variance analysis? What does it actually mean for me as an individual, if you're the department head, for as a business as a whole? Okay, so again, I'm not going to go into all these sections here because this briefing section here is for you to look for revision. So it's just a couple of things that you've got to think about when you come to the writing task. Just don't state the obvious, okay? Do not state this is this, we've got a favourable variance because the figures have come out as X, Y, Z. You've got to go into detail a little bit more. You've got to really understand what these variances mean. Okay, so please have a read of this section in your own time, just to get a good understanding of the things that you might have to talk about in the actual exam. Okay, so what will happen in your exam is you're going to get given a scenario, and there's going to be plenty of details about what's happening to an organisation. Okay, so you need to be making sure that the information that they give you in the scenario, you are using that within your answers. Okay, try not go off on a tangent if possible. Try and keep it as neat as you can. Okay. So another question coming, this task is about variances, no chance to be on ratios in this task. Not as it starts at the moment. That's more likely you're going to come in at task 7 where you might see ratios, where you're talking about ratios. Task 5 is generally about variance analysis, okay? Because what we'll see later on this evening is we'll start to learn about the key performance indicators, the ratios, and then task 7 will be bringing everything together to explain a little bit more. But again, don't worry about that, Jessica. Okay, so let's have a quick look at this scenario then. So it says you have been provided with the following information for an organisation which manufactures a product called Runner. Okay, and for the month just ended, okay, so we'll just say it's the month of November, we budgeted to produce 10,000 units by using 50,000 kilograms per unit at the total cost of £600,000. So if we just do a simple division, 50,000 kilograms divided by 10,000 units, we can clearly see here, not pounds, sorry, we can clearly see here that we want to budget to use roughly around about 5 kilograms per unit. Okay, so I'm just making a little bit of notes there. Okay, In terms of what we budgeted to spend, if it was £600,000 and we want to buy 50 grand's worth of 50,000 kilograms of material, we're doing a simple division. Your 600 divided by your 50 gives it around about £12 per kilogram. So that's the costings, the budgeted costings. Okay, if we go over to our actual results this time, excuse me, sorry, we've actually produced 9,000 units and we've used 42,000 kilograms of material. So making a note of what that would be, we're looking at around about the usage of 4.66 kilograms per material. In terms of our cost, 525,000 divided by the 42,000 kilograms, okay, gives us £12.50 per kilogram. Okay, so that's what we've actually spent. So we can see, well done, Mark. Yeah, you put the answer in there for me. You beat me to it. Fantastic. So we're kind of setting the scene first, looking at the information that we've been given to work out a couple of figures. Okay. It now says underneath that the finance director has asked you to write a note to help with training of a junior accountant technician. The notes are to explain the calculations of the total direct material variance. Okay, so we need to do a calculation and how it can be split into the price and the usage variance. Okay, so that's what the FD has asked us to do. Okay, so what we need to do then is prepare a quick note explaining the total direct material variance, how it then can be split, and then we need to use calculations in the illustrations to show what's going on. Okay, so as it says in the question, it's an 18-mark question. Okay, now what I would strongly advise you to do is try and talk about 18 points as a minimum within this task. Okay, so try and talk about a minimum of 18 points. Explain 18 different things that are going on. Okay, but the first thing that we're going to need to do in this question is let's actually calculate the variances for the material. Okay, so those who were with me last week and we did the variance, we're going to use the AS method again, just to show you how to calculate those variances. Okay, so we're going to calculate the three material variances. So we've got AA, remember we've got multiplied by AS, and then we've got SS. Okay, we've worked out in the scenario, we've been told in scenario what our actual kilogram usage is, and it's told us it's 42,000 kilograms. Okay, so we can simply put the 42,000 kilograms. Now remember, do not get confused with the S being that budgeted of 50 grand, because we need to do the SAC on that one, remember, the standard quantity for actual production. So what we're going to do here is we're going to do a little bit of a side calculation. If we was to use 50 kilograms of material, which was our budget, okay, to work out, you know, how many is needed, if you didn't do those pre-calculations that we did on the table, you would just simply divide it by 10,000, then multiply it by the 9,000 units. Or because we already worked out that we're using on average 5 kilograms per material, you could simply just go 5 kilograms multiplied by the 9,000 units. Okay, so our SAC therefore becomes 45,000 kilograms of material. So that's what we're expecting to use based on our budget. Okay, so we've got some good answers coming through into the chat panel. Okay, which is fantastic. Now what we've got here is we've got the costing. So this is the cost per kilogram. Okay, and we've worked that out already in the scenario when we did that table over there. We've worked out it was £12.50 per kilogram. We said our budgeted was £12 per kilogram, so we can simply put those figures into here. Okay, we know what our total cost is because it's told us that in the table. which is £525,000. So all we're then going to do is the calculations for the other two. So your 42,000 kilograms multiplied by 12 gives us a £504,000. Multiply the £12 by the 45,000 kilograms gives us a total of 540,000 kilograms. Okay. Now we've got the figures with those calculations. This is now what we're going to do. We're going to do a difference between them both to find out two of the variances. So if we put a small arrow there and look at the difference between the top total cost and the middle total cost, that is £21,000. The difference between the bottom ones is £36,000. Okay. Right. What we then need to do, okay, is we need to then state, well, is it adverse or favourable? What is it we're dealing with? So this top one, we're actually dealing with the material price variance. So always think, if you struggle which way around it is, accountants are always interested in money. Let's look at the pricing first, which means this must be the material usage. Okay. So, because we're looking at the material pricing, we're going to compare these two figures, okay, for this variance here. And because our actual is 50 pence more than our standard, it means we've spent more. So this becomes an adverse variance. So you have a material price variance there of £21,000 adverse. When we look at the material usage, what we now compare is how much have we actually used, and that is what gives us this variance here. Okay, when we made 29,000 units, when we budgeted it at using what we wanted to use, which was the 5 kilograms, we would have expected our staff to use 45,000 kilograms of material. However, in the actual production of those 9,000 units, they only used 42. So they've used less than what we expected, which is better for the business, which has resulted then in this variance being a favourable variance. Okay, so now we've got the material price variance and we've got the material usage variance. All we then do is compare the two variances. Now, because my favourable is higher than my adverse, I'm just going to take off that adverse variance. So the difference in figures this time is now £15,000, and it's going to be favourable because, like I say, your favourable is higher than your adverse. And what that figure there now shows is the total material cost variance. Okay, so that is how you would calculate the variance for these scenarios. If you have it written on a side piece of paper, you've got all the figures there in front of you. And now what you can do is you can now start to write this note to your trainee, okay, and you can then start using these figures within your answers because they're already there for you. Okay, so what I'm going to actually do is I'm just going to give you a few pointers in terms of what to write. Now, I'm not going to write every single mark that's available. I'm going to bring up the answers and we can have a look and review a textbook answer in terms of what the point should be. But what I would advise you to do is think of who you are writing this to, okay? And it says you are writing it to, writing a note to help the training of a junior. So you need to be making sure that you're kind of doing a bit of a dummies guide, take into consideration they don't know, you know. I hope, Natalie, fingers crossed it comes up like this in the exam for you too, because you need to take into consideration that they might not know anything about variances. They might not have an understanding of what they actually are. Okay, so my advice would be these are the steps to take. Okay, so please make a note of these steps. So your first step, okay, would be to explain what variance analysis is. Okay, so what is variance analysis? Okay, and like I say, we'll have a look at a textbook answer in a moment, but this is just to help you. Then explain, okay, what the total direct material variance is. So once you've explained why we do variance analysis, then now start to go into the nitty gritty. Okay, so what is the total direct material variance? And number 3, do the same. What is the material price variance? So you're going to explain each element. Okay. Number 4, what is the material usage variance? Okay, when you're explaining those 3 sections, though, these numbers 1, 2, and 3, make sure that you actually put figures into there. So there's just some questions coming through here. So another video I watched mentioned to comment on the product, showing you've read the question. Yes, you will do. So what you would do is when you're talking about the direct material cost variance, the material price variance, when you talk about the products that you're making, don't just say a product I'm making. Make note of you are making a product called runners. So the runner has a variance of X, Y, Z. The runner has this, the runner has that. Just so the examiner can see you have actually read the scenario. Okay, but like I say, when you're dealing with these, you're going to start put some figures into it, and you'll see this when I come to bring the textbook answers up. Okay, state as well about the variances being adverse or favourable, but what you've got to do is explain them as well. So explain what adverse and favourable means. Is it good for the business? Is it bad for the business? Things like that. But then explain why the adverse, why the favourable within this scenario. Okay, so, make sure you show calculations. So like I say, this is just a tip. That's why I'm not writing the answers yet, because we'll have a look at the textbook answers. So show your calculations whilst explaining. Okay. Give plausible reasons for why it might be happening to get those extra marks. So why is the priceage gone up and the usage gone down, things like that. So we'll have a look at, some reasons for those. So give plausible reasons. For this happening. And then lastly, if you can you link the variances? So as an example, if your material price variance is increasing because you're spending more, however, your usage is going down, let's have a reason for that. Is it because we're either, buying more expensive wood, which is not causing the wood to break during production? So the usage is decreasing. Because so you can see now the link between those 2 elements. So see if we can try and link them. Okay, give plausible reasons. It might not jump out at you in the question, but as long as you can give a plausible reason for it happening, you're going to get some marks somewhere. Okay, so let's have a quick look then at the textbook answer. Okay, so as you can see here, it says you should aim for around about 18 marks. Okay, talk about 18 points. So as long as you can follow those processes here. So we talk about the variance analysis section first. Okay, then we talk about the direct material variance. Then look at the price. Then we've got the usage. Then we talk a little bit about what, the difference, working them out. You've got your material variance, it's adverse, favourable, combined, doing a bit of a conclusion. So, what I will do is I will send this through, this answer sheet as well, Yeah, that's absolutely fine, Louisa, and Emiliano, you said it as well. I will get this sheet put on to my notes when I send the details through, so you will get this in your exam. So like I said, I don't want to go into all of it, but you can see, for an example, if you just explain variance analysis is part of a control process at a period, you're only going to get 1 point. Yeah. If you then go on a little bit further, or if you then say another point about what variance analysis is, it compares actual to a flex. Make sure you remember it's flex. We flex in that, we're flexing the standard for actual quantity. That's why we do the SAC in the AS method. Okay. So make sure you explain that. What does it mean, favourable? It's your profits are going to be better because you're not spending as much money, or you're getting a lot more revenue than you're expending. So you're really, really going into detail in terms of explaining what your analyses are. Okay. It's when you get to the individual, the 3 variances, that you have to go into further detail, explain how you get to those calculations. Yeah. So you're comparing not just the original, okay, because it doesn't give you the exact figures, but you're actually comparing your cost due to changing and doing a flex budget, which is that section of the AS method. So as you can see from this area here, okay, that we're putting in the calculations, okay. Same with your material price, same with your material usage, okay. So I will give you this to have a look at, okay, and have a look. So we've just got some more questions coming in there. So let's have a look. Can we link a couple of variances? As the material price is higher, given adverse material price, but usage is favourable, as a higher Q is used would lead to a favourable labour efficiency. Yes, you could do if you wanted to, because that's showing the examiner. That's showing the examiner that you have an understanding, but you'd need to go into more detail about the labour efficiency. That's the only thing, okay? Because you've got no data about labour, which I think, Elizabeth, you just pointed out there. You thought labour efficiency was down with hours worked, which it is. What you could potentially do is, if you've seen the usage go down, okay, in terms of we expected 45,000 kilograms to be used and 42,000 kilograms were actually used, is that because you've got better staff on the job? You've got higher skilled staff. Yeah, there might be a little bit more sufficient and things like that, okay? So you could link it into a variance if you wanted to say, if I've got a better usage, even though my price has increased for material, this may also, don't say it is because you haven't got the data, you could say this may also result in the labour variance being favourable, okay, because you're not, you're using more skilled staff. So you're therefore telling the examiner that you have an understanding of that variance as well, okay. So some more questions come through then. So each one is sort of 4 marks as this way. Why does it mean? Then 2 marks to say what the variance is, and then the conclusion. Yeah, you can break it down that part if you want. So it's like you say, you've got 4 elements there. So 4, 8, 12, 16. If you can try and aim to get 4 points in each of them, do a bit, 2 points in each of them, do a conclusion, then, I've not done that, 4 points in each of the 4 sections, and then do a conclusion. That should be around about your 18 marks that you've needed. Okay. So material usage efficiency doesn't necessarily mean lib. No, it doesn't, Paul. It doesn't at all. Okay. So, but it can be linked into it though as well. The fact that you've not got any labour data in this task, it would be hard for you to say that the labour efficiency is linked to it, okay? But you could state in the question, if you wanted to, that rather than saying the staff have been efficient in terms of doing it quicker, that the staff are not breaking because you've got a more skilled staff, which might link into, variances in terms of the labour, okay? So you can, if you want to, link it through to labour if you want. My advice would be in this question, because you've only got data relating to material, just stick to the material variances rather than trying to link it to labour. I know with budgeting, they do ask you to try and link material and labour together, okay? So yeah, missed by 1%, got 69. It's always tends to be the written questions, okay? Yeah, Deborah, I agree with you. Maybe because it's a junior, keep it simple, yeah? When they get to know the variances more and you do more training with them, then start linking further ones, okay? Could you say the budget was wrong? No, because the budget isn't wrong, is it? The budget has been approved by your organisation, okay? What you have to do is you could explain that at the beginning of the period, a budget was set and this is what we wanted to do. So we wanted to use 50,000 kilograms of material. We wanted to make 10,000. But what we're doing is we're flexing that budget to then compare it to the actual. So that is something that you could talk about in that first section in terms of the variance analysis, okay? Because that is what a variance analysis is. It's comparing the flex against the actual. So the budget wouldn't be wrong. All you're doing is you're rewriting the budget to as though you was making the actual units produced rather than the budget unit produced. So yeah, it's what you're comparing, what we're expecting to spend. So well done for those who have come through on that chat with that one. Okay, so that's task 5. As I've said, I will send through a copy of this sheet here along with it, just so you can compare and have a quick look at what might be expected. Because as you can see at the bottom, this is actually giving a 27 points of put in there. So this, in this answer, we've gone above and beyond expectation. Okay, on here, normally, to exceed, we'd be looking around about 24 marks. But for you to pass it comfortably, you need to be writing, in total, around about 18 marks, okay, as it says there. Okay, that's what you should be aiming for. Okay, dokes. Right, so let's have a quick look then at task 6 then. Okay, so are there any more questions on that task? So it says, can you score more than marks available then? Yeah, because it all goes on met and exceeded. So I don't know if you've had a look at your AAT results before, where you've seen it exceed, meet, below, significantly below, borderline and things like that. An 18 question mark is around about a met one. Okay, so that's why you were saying try get 18 points in there that you need to discuss. And then anything above that, you're going to then start exceeding. Okay, so moving on to task 6 then. What task 6 is all about is calculating those lovely key performance indicators. Now, if this is not your first level 4 subject, you should know these inside out, because they do come up in every single module, mandatory module anyway, at level 4 AAT. Okay, so you'll be calculating some performance indicators, and you'll be dealing with some cost management techniques as well. So again, this one's around about 18 marks, and it should take you around 17 minutes to complete the task. Okay, so sorry, is that a question come through? Sorry. No worries. Okay, if any questions could just come through on the chat, that would be great. So sorry, Navida, have you got a question? Nope, not to worry. Okay. No, that's absolutely fine. So you must have just hit unmute by error. Don't worry, not to worry. Okay, so task 6, okay, about key performance indicators. Okay. So what this is involved is we're looking at the ratios of a business. Okay, so there are a couple of things that you need to do. So they might have not come up in the budgeting exam, but I'm sure there was something in the notes about it. I know it was removed in the actual exam itself, but in terms of content, there should have been a small section on the ratios, just about how, just to monitor the performance of a business. Okay, but anyway, like I say, you should have had definitely a lot in the financial statements exam, definitely in that financial statements exam, but like I say, just making sure you were told to ignore them in Maboo. Never ignore content, I would say. Always use it. It might be there for knowledge understanding, but definitely don't ignore information. Yes, okay, they might have taken it out of the exam, but you need to know these inside out. Okay, so what we've done within this task is we've actually given you the ratios that might come up in your exam. Okay, and unfortunately for you guys, you do have to learn these ratios. Okay, so all these ratios here are split up into sections. So we've got profitability ratios, you've got liquidity ratios, you've got the gearing ratios, and you've got the labour productivity ratios. Okay, so you do need time to look over these. Okay, you do need to make sure that you know these ratios inside out. So this is something, unfortunately, that you must learn. Okay, so if you don't know these, I would strongly advise you to get flashcards or something like that, just so some of them are self-explanatory, like your gross profit margin and things like that, but please, where possible, learn the ones that you don't know. Okay, so going through these then, flashcards on these ones, so to write down through to the labour productivity, just have a quick read through those. You might also get given a couple of questions in the exam, whether the tick boxes, true or false, which statement's correct, etc., about life cycle costing. And you might also have to do a little bit of a calculation, comparing some scenarios where you might sell at different price levels to work out some target costings. Okay, and again, within this task, you may also get given questions on activity-based costing and discount cash flow. So again, you should have always received tuition for these already. So this is just telling you what the task itself would be about. Okay, so let's have a quick look at the task itself. So it says you've been provided with the following information for 2 scenarios involving a company which operates an absorption costing system. Okay, so if we remember absorption costing, it soaks in the fixed costs into the units. Yeah, so you've got your selling price, which has a combination of your variable costs, your fixed costs, and obviously you've got your profit as well. Okay, so that's what your cost unit would be. So the 2 different scenarios we've been given here. So scenario 1, we've got a sales volume of 50,000 units, and scenario 2, you've got a sales volume there of 60,000 units. With each scenario, we're told what the revenue is, we're told what the gross profit is, we're told what the profit from operations are, what the net assets are for each of the scenarios, and what the value of the inventory is as well for each of those scenarios. Now, what we need to do is we need to calculate the performance indicators, hence the reason you need to learn the formulas, because in this question, you don't get given them. Sometimes in your exam, they may give you them, but I'm not going to tell you that they will, because, if I tell you, yes, they will give you them, and they don't, you could come back to me and just say, Leanne, why did you say that? I didn't learn them. So my advice would be always learn the key performance indicators. Okay, so we've got gross profit margin, you've got your net profit margin, return on net assets, sales price per unit, inventory holding period days, and the full production cost that we've got to work out for each of the scenarios. Okay. Just make note, the question is asking us to put it to 2 decimal places. So if you don't put it to 2 decimal places, regardless whether it's a percentage, whether it's a cost, whether it's days, XYZ, then you will unfortunately fail that part of the exam. Okay, so you have got your sheet of paper at the beginning, which helps you to work out what your ratios are, but we're just going to go through these together anyway. Okay, so I'm just going to move over to another piece of paper just so we can write the different scenarios down and the workings for each of them. So we've got scenario 1 and we've got scenario 2. So the first thing that we need to calculate is the gross profit margin, and that's calculated by, it's the gross profit divided by the sales revenue, and we're going to multiply that by 100. Okay, well done, Dahlia. So, and Elizabeth. Okay, so for each of the scenarios, let's work that out. So my gross profit for scenario 1 was 150,000, and for scenario 2, it was 120,000. We've got that from the table. We've got that in the data. We then divide it by the revenue, and the revenue then was 600,000 and 660,000. Then all you do is you multiply by 100. Okay, so for scenario 1, that comes out at 25.00%. Remember, we've got those 2 decimal places. So Elizabeth, well done, you've got that. And then this one comes out at 18.18%. Okay, so we can simply pop those figures into the box here. So you've got 25.00, 18.18. Okay, remember, 2 decimal places. The next one is the net profit margin, okay? And because in the table you've not got anything called net profit, but your actual profit from operations is your net profit. So that is the figure we are going to use in this calculation here. Okay, so very similar to gross profit, but it's your net profit divided by your selling price multiplied at 100. So this time we've got 80,000 divided by your 600,000 multiplied by 100. And then we've got your 50 grand divided by your 660, again multiplied by 100. And this gives you the answers of 13.33. Well done, everybody who's coming through on the chat. And 7.58%. Well done. To 2 decimal places, cannot stipulate. Do we have to put the percentage? Yes, I would. Sorry, I would, because some of these ratios are shown in days. If it doesn't say anything in the top, please put the percentage, please put the days, etc. It will give you instructions if they don't want you to do it. Okay, so my advice, okay, but sometimes it says invalid amount, right? If that is the case, if it's saying invalid, don't put the percentage. But if it's allowing you to put the percentage in the task, put the percentage marks in, just so you're showing the examiner that the result is a percent, okay, rather than days, rather than costs. Okay, so that's what I would advise you to do. Okay, so here we've got 13.33%, 7.58%. So again, we're just working down each of those. So what I'll do is I'll just do the calculations at this side before I go back and fill them in the box. So now what we've got is your return on net assets, and this is calculated by your net profit divided by your net assets, again multiplied by 100. So we've got here then, you've got your 80,000, your net assets from scenario 1, which is £1.3 million. Okay, multiplied that by 100. Same over here, you've got your 50 grand divided by your £1.15 million of assets at 100. So yeah, well done, those coming through. You've got a 6.15% and you've got a 4.35%. Okay, so that's how you'd work out return on net assets. In terms of your selling price per unit, that's straightforward, okay? So your selling price is just basically, it's just your revenue, okay, divided by your volume. Okay, so from the scenario, for scenario 1, we've got £600,000 divided by your 50,000 units, okay, which equals, I'll just do it in red so it's consistent, £12. And then we have got £660,000 divided by 60 units this time, okay, which is £11. So well done. Remember 2 decimal places, everybody. I know Jackie and Nelly, you've probably just put 12 and 11 just for quick on chat, but just remember 0, 0 on the end. Okay. We've then got the inventory holding days. Okay. So your inventory holding days is calculated then by your inventory divided by your cost of sales multiplied by 365. Okay. What we've not got in the scenario is we have not got the cost of sales figures in the table. But what we do have is the revenue and the gross profit. So revenue minus gross profit will equal our cost of sales. So the difference then between the revenue and the gross profit for scenario 1 is 450,000. Okay, so that's the cost of sales for scenario 1. And for scenario 2, the difference between the revenue and the gross profit there is £540,000. So you've got to do another little quick calculation to work that cost of sales calculation out. Okay, so going back then to our workings. Okay, so inventory for scenario 1 is 49315. Divide that by your 450 cost of sales figure, multiplied by 365. Then you've got 82,877 divided by 540, times that by 365. And yes, you guys who have already put some answers in there, it's 40 days. And it's 56.02 days. Well done for those decimal places, everybody. Well done. Okay, so then your full production cost this time is, let's have a look at the cost of sales. And we're going to divide that by the volume. Okay, so you've got your £450,000 divided by your 50,000 units. You've got your £540,000 divided by your 60,000 units. Okay, and that gives you £9 per unit. And again, still £9 per unit here. Okay, so all the reds, we've calculated those here. So that's your full production cost per unit. Sorry, just add a PU on this end of it. So I'm just going to transfer those figures into this table just so we can see it complete. So you've got 6.15%, 4.35%, £12, £11, 00 days, 56.02 days, and then £9 and £9. So if it's a free box for you to type in, put the percentage, put the pound symbol, put the days. It might only just let you put the figures in. Okay, if it only lets you put the figures in, just make sure that you're doing it to 2 decimal places regardless anyway. Okay, so that's how you complete that first section. Now a third scenario has appeared. Okay, it's now told us that we've got some net assets. Could I go back to the last working? Sorry about that. So your full production cost per unit is your cost of sales divided by your volume. Okay, so your cost of sales for 50 divided by your 50. And then for scenario 2, 540 divided by 60. Okay. No worries, Louisa. Okay. So third scenario has now come up. We've got a value of our net assets of £250,000. It's told us the percentage already. No, that's not on the sheet to learn. It isn't, but you've got to have an understanding of how to do your cost per unit. So if you get a total cost, so if I turn around and say to you, I've made 10,000 units and it's cost me 100 grand to make it, how much would it be per one unit? So that's kind of what you should have learned already, even at budgeting. Okay, so it's not a part of a key ratio. It's just let's work out a cost now per unit. Okay, so we've now got net assets worth 250 grand. It's told us the percentages of the ratios already. What we now need to do is a bit of a reverse calculation to find out what the profit is and to find out then what the sales revenue is. Okay, so if we think about the return on net asset, the formula needed for that. Okay, so the RONA is equals, it's your net profit, which is your profit from operations, okay, divided by the net assets, okay, multiplied by 100, which means we don't know at the moment what the net profit is, but if we divided that by 250 grand, okay, multiply it by 100, it's going to give us the 10%, which we've got here. Okay, so all we need to do is just calculate what is 10% of £250,000. Okay, so £250,000 multiplied by your 10% gives you your net profit figure, which equals £25,000. Okay, and that's what we're going to put in this question here into the answer. We then need to look at the sales revenue, and because we have got a profit margin of 25%, remember the profit margin is where our selling price is now equivalent to 100%. If it was markup, your cost of sales will be equivalent to 100%. So if my revenue equals 100%, and my profit, my profit equals 25%. If my £25,000, which is my profit, is equivalent to 25%, let's just divide it by 25 and multiply it by 100. Easy in this case because it's straight figures. Yeah, 250 grand divided by 25. Times it by 100. We can clearly see now that my sales revenue therefore is £100,000. That's quite nice and easy to do because it's round figures. So your cost of sales would be 75 grand, adding them both together being £100,000. Okay, so that's quite a nice one to do. So moving across then to the next question, it now says fill in the boxes with the appropriate options to show how to calculate the gearing. If there is more than one correct answer, either answer will achieve you fuller marks. So first of all, let's have a think. What is gearing? Now, in the gearing ratio, without looking at the ratio tab, this is how you can actually think of it. Gearing is all about raising finance. Okay, raising finance. It's how dependent, okay, the organisation is on finance. Okay, on financing. So, how dependent are they on finance? Or should we say debt financing? That's basically what this means is. Okay, so let's first of all then have a look at the question in itself. Okay, so when we're dealing with the gearing ratio, how does it have to show? Do we have to show it as a percentage? Do we have to show it of days? Okay, so basically with the gearing ratios, it's showing what percentage of the money they have or the money of their business depends on financial obligations. So what we mean by financial obligations is equity, so the amount of shares that's been invested into the business, what loans they might have as an organisation, And because we have to show it as a percentage, anything that has a 360 in it, we're just going to ignore, because we know it's 100 that deals with percentages. Now, again, because it's to do with financing a business, okay, we need to think of these two now. Debt is a finance to the business because we've raised money. Equity is a finance to the business because it's shareholders. If we look at option one, yes, we can see there's debt there, but what we've got here is we've got net assets. And what net assets is yes, okay, it's equivalent to your capital because you've got what your net assets are, your assets minus your liabilities. But in terms of how we actually write it, we actually write it as equity. Okay, so this one would be incorrect, and you would be looking out for option 3. Okay. Okay, so well done those who have put the percentages and the correct answer in the chat panel. Okay, so we're now moving on to the final part of this task. Okay, and this is all to do with target costing. So it says a business is considering designing a new product XV7 and will use target costing to arrive at the target cost of the product. So you've been given the following information, okay? The price of the product will be sold has not yet been decided. So by this, it looks like we're going to have to do some comparison. We're going to have to look at some different scenarios to see if we can make a decision in terms of what we should sell it for. Okay. So, well, it should be there. Well, so Paul, you've just put in there, it should be debt plus equity. It's either two. If we go back to gearing, let's have a look up here, sorry, before we move on to that one. Okay. It says, if you look here, it's debt divided by equity or debt divided by debt plus equity. It depends on what your debt is. Okay. It depends on your long-term loans, your short-term loans. But yes, they will accept both answers, but because you haven't got a debt plus equity in the answers to select from, even though you have down here, but that's multiplied by 365 days. It's not multiplied by 100. If this question did say multiplied by 100 and you tick both of them, then or if you tick the last one, you would get them because both of these two would be correct. Okay, so just be careful because, yes, you can write it using that, but it's multiplied by 100 and not 365. Yeah, trick question, very trick question. Okay, so sorry, just let me have a quick drink. Sorry, apologies, everybody. Obviously advertising first intuition there. Okay, so last part of this question. It's estimated then that there is that if the selling price is set to £20, then we will have a demand of 100,000 units. Okay, so we'll get more people to buy it if we sell it for 20, because if we sold it for £25, we might only there might only be a demand of 9,000 units. Okay. A cost of production includes fixed production costs of £500,000. So our total cost of production, part of that cost has £500,000 worth of fixed costs. And that £500,000 worth of fixed costs can give us the capacity of 100,000 units. Now, because we want to decide between 190, we don't need to worry about this next point where it says in order to produce above the level, it will step up by £500. The units are less, okay, so we can actually ignore this part. It's there to be a little bit of a trick question. Okay, there's a profit margin there of 20%. We've got variable costs this time. So if we are doing 90,000 units, the variable cost is £11. And if we're doing 100,000 units, the variable cost will be £12 per unit. So now what we need to do is we need to calculate what the targeted total production cost per unit would be, the targeted fixed cost per unit, and then the targeted fixed cost production. So I'm just going to do another table to the side, okay, for each of the scenarios. So if we're doing it, selling it for £20, and if we're selling it for £25, okay. So we've got the demands. So we've got 100,000 units if it was 20. We've got 90,000 units if it was 25. Okay. We've said in the scenario, or it tells us in the scenario, should I say, that there is a profit margin of 20%. Okay. So the profit, if we were selling it at £20, must be £4 per unit. And it must be £5 per unit if it's £25. So remember, your selling price is 100, just calculate the profit margin percentage to get what the profit would be. Which means that the cost of sales then, the cost of production, okay, is £16, okay, and £20. So well done, Jackie, for popping that into the chat. Okay. How is that cost now made up? We now need to split it. What is the variable cost? What is the fixed cost? It's told us, well done, Zalia there. It's told us in the scenario that the variable cost, if it was £20, okay, for 10,000 units, is £12, which means that the fixed cost must be equivalent to £4 per unit. The variable cost for the £25 is £11. So if we take that off from the cost, the fixed cost therefore should be £9 per unit. Okay. So now what we need to do is work out what the total fixed cost would be. And all you do is you multiply each of these figures per unit by the demand levels. Okay, so we should have here £400,000 and we should have £8,100. Okay, the total cost there, targeted fixed production costs. So by working this out, we've actually got the answers that we need, okay? You've got your fixed cost, your cost of production there, which is 16, okay? You've got your fixed cost figures there, which is 4 and 9. You've got your total fixed production cost there, which is 400 and 810. So these are the figures that we're just going to simply drop into this scenario here. 16, 20, 4 and 9, 400, and then £810,000. Okay, so the last part of this question, it says, sorry, where did the 4 and the 9 come from? Sorry, I'll just come back here. Okay, if your cost of production, we'll change that to a P actually, your cost of production was £16 and you've got a variable cost of 12, it means your fixed cost must be £4. Yeah. If you've got a cost of production of £20 and your variable cost is 11, then your fixed cost therefore must be 9. So that's where the 4 and the £9 comes from, not to worry. And then you just use those figures to multiply it by the demand to get the total fixed production costs. Right, so in the question, the cost of production includes a fixed production cost of £500,000. Okay, so when we produce a unit, obviously we want to be making sure we are meeting the full fixed costs. Now from here, we can see that we've got 400,000 and we've got 800,000. Okay. If we sold it for £20, we are not meeting, it's too low. It's not matching the £500,000. Okay. But if we then select it at 25, it does actually include the £50,000, the £500,000, but it will then start to give us additional profit. It's going to cover the £500,000. So what you need to look at in this question is which of the two scenarios will include the 500,000. This is too low, okay? We're not going to meet the fixed cost needs, where this will meet the fixed cost needs, and then the additional will be classed as additional profit. So think of the contribution per unit. Yes, you have got your profit margin, you've got your demands, but we'll start to build some more profit. So because of the 500 grand being fulfilled by selling price of 25, the business then should actually set that selling price at £25 per unit in order to achieve their profit. It's not the cost, even though it says it will be. However, if we think of here, we do have fixed cost production. That's what our cost would be. So any additional cost that we calculate in the figures would be classed as additional profit. If you remember your cost per unit calculation, so your contribution equals your fixed cost plus any profit. So yes, although you've got a profit margin, okay, although you have got a profit margin, anything in addition will be classed as additional profit to you as a business, because remember, the more units that you make, your fixed costs should spread out. Okay, it should lower, so you're going to be making a higher profit. So would a written question be in this question if they were to ask you why you would pick the selling price? Not at this point, Abby. It's when we move into task 7, which is what we're going to cover next week. It might come up in that section. Okay, so I'm just going to jump ahead quickly, because I know with task 7 is all about analysing performance indicators. So if you're interested in task 7 and how to tackle that, please come back next week, because you will be having to again do some more performance indicator calculations and then analyse them in a written task. Okay, so thank you ever so much for listening this evening.